So a lot has happened in the last week and a half. Man, markets have changed. Oil is up. Interest rates are starting to tick up. 10-year treasuries back over 4%. So I want to go over a couple key indicators that I want you to think through. I want to have some strategy around this and how we can help clients navigate these waters right now. So check this out. We've had the market futures move up almost $20 in the last, since early March. We're still in early March. So March 3rd, popping way up. So oil futures are driving up because they're concerned about supply and oil supply, and also potential issues with inflation. With war is generally going to be inflationary, which also is going to push up other pricing. So we saw that in the 10-year treasury. 10-year treasury has been pushing up. We had a bottoming out early March or late February right here, and then we popped up over 4% again. So we dropped below 3%. We started seeing the news articles of interest rates haven't been this low in a long time. We always have to go all the way back to 2025 April, and then even past that back in 2024 to get to these low levels of the 10-year treasury. So that was great news. Well, right after what happened, right after all this news came out that interest rates are hitting all-time lows again, man, interest rates have popped back up. Now, good news is interest rates have not shot up significantly yet, because I think the sentiment that interest rates, the Fed might actually be able to have some more ammunition to push these interest rates down. We got some good news this last week. The jobs numbers came in weaker than expected. So jobs numbers were down significantly overall. So this is all good data right here that has given us some benefits to the interest rate market. Now, the problem is the oil is outshadowing the significant job loss consistently. So that's happening, the report as of Friday. And we're seeing this live in the markets today. And I think the key takeaways here for this as kind of real life, hey, we're all boots on the ground, is that talk to your clients, make sure that they're aware of these kind of large moves, right? Because they might have got a pre-qualification letter right at that tippy, kind of that bottoming out of the interest rates. So re-engage them, make sure they're, plans up to date. You don't want to freak them out, because the reality is we might have a bounce back and, it might be okay in a week, and interest rates might start their downward decline again. So just make sure you're talking to them. You're aware that we've had these big swings. So don't be blindsided if somebody goes to, they'd say they got a rate quote a week and a half ago, and then they go to lock their rate. They might be like, whoa, what's going on? Interest rates are up. Well, yeah, they are up, and here's why. And so I wanted to give you some charts on this and information so you're aware of it. You don't have to overthink this stuff, but it's good to be aware of it. I know a lot of my videos don't necessarily get into the nitty-gritty of interest rates, because ultimately we have to help people buy, sell, or refinance, throughout their life and life decisions. And that's been a lot of what's going on the last couple of years. So just be aware of it. We haven't had a massive swing in interest rates yet. We probably have seen about an eighth of a point to a quarter point increase in interest rates. But the good news in all this is that if you have buyers out there, we might see buyers be a little bit more reluctant to buy. So the competition is not going to be as fierce as it was if the rates did continue their downward slide. So if you're a buyer watching this, or a realtor that working with a lot of buyers, make sure you're helping them create and craft the right plan. A lot of times, I just did a video on this yesterday. A lot of times where realtors go wrong and clients go wrong is their realtor will say, hey, go get pre-qualified. Well, just getting pre-qualified isn't necessarily enough. That's great. You got a piece of letter, letter that says you're pre-approved. That's not necessarily what you need. That's the easy part of getting somebody a loan, is getting them pre-approved, because that may be a legitimate pre-approval. It may not be a legitimate pre-approval. You want to give them a mortgage strategy and a plan. So above and beyond just getting them pre-approved, you want to have a lending partner, whether it's me or another lender, making sure that they give them a plan and a strategy. And then they have a team to help them with the strategy as that changes over time as they go look at a house. For example, we have a client right now. Hey, I want to be at 500,000. That's it. That's the absolute max. Great. Go out there and look at houses at 500,000. See if it fits your needs. If it doesn't, let's recalibrate that plan and strategize to see what it looks like at a different price point. It is important. Right now, things change. People change their targets. They may make more or less money from a house they're selling. So that could be a big change in their dollar amount of what they're going to buy on their next house. So you don't just need a pre-qualification letter. You need your clients to have a mortgage strategy. And thanks for watching the Saturday Strategy. Good luck out there. Let's navigate these waters together. And I hope you have an awesome weekend.